For the session of the 13th of July 2021, Exela Technologies Inc. closed at $4.34 and it's currently trading at $4.55 in this pre-market slash post-market extension session. And I think so far 391,700 shares have crossed the tape, which is still being regarded as below average, but the session is still very much young. So 59.192 million shares are outstanding, which may be different from the float. Market cap is $256.9 million. We can clearly see that the stock is strongly bullish and extending. A quick look at the short interests and short volumes for the 13th of July. We have 59.31% of the entire volume was sold short, which is tangible enough. Okay, and the short interest, which probably includes those of the options as well, has it at 15.03%. So yes, this stock definitely has been on the news. At some point it was regarded as the most shorted stock, and that is why we are covering it to see what's out there to bring you up to date. So right now in this pre-market session or post-market session, it is currently at 4.5459 and extending bullishly. All the signals are very much bullish. Yes, let's see if we can get the RSI. RSI is definitely at 79.31. That's a bullish signal. And since July, when was that? Since some late June, the RSI has just rose. Sometime in late June, it rose above 50 and has continued to extend, even though it's pulled back a bit. But since last week, I believe it has just continued to extend and extended beyond the 70 mark. So these are very much bullish signals for Exela. MACD above the signal line and extending. 14 period slow stochastic oscillator at 79.11 as well. All of those are positives, bullish signals. Stock is significantly trading above all of its moving averages. This is the daily model, all of its moving averages, and also above its volume weighted average price. Let's look at the weekly model and see what's going on there. Okay, for the weekly model, it is below the 200-day moving average. That's the 200-day moving average, and if that is an encouragement, some market participants can see this as a motivation. They're looking at the weekly model now. It is below the 200-day moving average, and are saying, yes, I think it's not overbought. It's not overbought yet. This is a signal. This proves it all. So let's keep going. So let's return to the daily model, because that is what is giving us the more accurate reading. So we are looking at an extension of 5.53% in this pre-market session of the 14th of July. So all the oscillators we have here are very much bullish. MACD histogram above zero and rising. 14 period slow stochastic oscillator, the same thing. Exela appears to be in a strong bullish trend. Its 200-day moving average is upward sloping, and the MACD histogram is above zero and rising. It is easily outperforming the S&P 500. Momentum for Exela is strongly bullish. The 14 period slow stochastic oscillator is rising as investors pay high prices for shares. The unbalanced volume indicator is bullish. The slope of the indicator is positive and suggests that buyers are presently more active than sellers. The Bollinger Bands are presently wider than usual as a result of greater than normal volatility that accompanied the recent price move. Events such as this may precede a positive reversal in the near-term trend. So if you do want to get involved with Exela, it has been extending since the 9th of July. It has continued to extend relentlessly. That was Friday, 9th of July. And since that time, I believe it is close to have doubled. It's close. It hasn't doubled yet. So a double will be at 562, but it's not there yet. But it has run up a huge amount of extension. It has a history of pulling back. We can see that since Since June, it has been extending, gapping, but also correcting and pulling back. So that is good. That is good. They are just consolidations. So, but this time around, it has run up by far more extension. So expect the stock to pull back, and correct anytime soon. But left to us, we wouldn't call it a buy. The signals are very much bullish there. I mean, given all the short interests and short volumes, but at the same time, it can always disappoint you. But if you really want to get involved with Exela, just be really careful. The momentum is strongly there. If you're going to do that, by all means go ahead and just expect that the stock will pull back, it will correct. It is a certainty. It is most certainly going to happen. Just expect that it will happen. And at the moment it's not so hot, just an extension of about 5% in this pre-market session. When the market opens, it might do more. The stock, it's expected, the expectations is for the stock to skyrocket. It is a loaded gun. It is ready to do that, but at the same time as well, it can clearly blow up in your hands, in your face. It can disappoint you at the same time as well. So you decide what it's going to be, buy it or not. So there isn't really any news as such. The last piece of news came out on the 12th of July. That was Monday, the 12th of July. It says here, Exela, a global business process automation leader, during that session, expanded its offering in AI-enabled automation in BPA space with intelligent document processing combined with its robotic processing automation platform. This industry-leading automation solution is deployed in the healthcare and public sector and further cements Exela as one of the leaders in the industry. IDP enables the automation of document classification, data extraction, and data routing into a cloud or on-premise hosted service portal that provides a containerized, dynamically scaling solution that can be accessed from anywhere on demand. Using the IDP system, Exela has begun leveraging an extensive and growing library of machine learning based classifiers that significantly augment the automation of document processing in the healthcare and public sector, and has plans to ramp up projects in the finance and legal sectors. The IDP solution includes modernized data entry solution that delivers rule-based character-level data correction capabilities that dramatically reduces the keystrokes needed to meet customer service level targets. Okay, so the fundamentals look right, but the skeptics are there, which is excellent. We want a stock that is extending, it has the positives, to also have the skepticism towards it. It's not it wouldn't be balanced enough if it just has all the fundamentals right and there are no skeptics out there. So the skeptics are right because they, amongst other things, they lock up money into the stock, and that is good. You want a stock that has the fundamentals right. You want a stock you like, and you're honest about what you have read, and you're convinced to also have money locked up in it in the form of short interests, in the form of skepticisms. So Exela has it, and it's going for it. It's currently strongly bullish, has remained strongly bullish for some weeks now. The momentum is there, name it, it's there, the signals, everything is there. But at the same time, it is also highly risky. It is expected to continue to extend. At the same time, the reverse is also the case. So it is highly risky, but the fundamentals are right. You decide, you balance out and see which direction you're going to go. Left to us, we want to see a correction, a pullback, before we can really call it a buy. Okay, we don't have any position there. Okay, so let's see how things go, and be careful out there, know what you're doing, and but at the same time as well, take the risk and see what's going to come out. Thank you very much for watching this video.